We have a truncated week coming up owing to the long holiday weekend and the Platinum Jubilee here in the UK. But there'll be plenty going on overseas and in the 3 days at home when the markets are actually open. On the macroeconomic front, the key features will almost all come from the USA, in the form of consumer confidence figures on Tuesday the 31st of May, car sales on Wednesday the 1st of June, and the latest job and wage figures on Friday the 3rd of June. Very quickly, in order, the last Conference Board consumer confidence reading, which covered April, was 107.3. Now that represented a very small dip from March, but it was also a 10-point drop from the year before and way below the pre-pandemic high of 137.9 reached in October 2018. Economists, central bankers and politicians will be looking to see if inflation, and especially higher food and fuel prices, are starting to take their toll, especially as consumer spending drives around 70% of US GDP. The latest figure for US car sales on a seasonally adjusted annual rate, or SAAR basis, was 14.8 million for April. That was a 21% drop on the year before. Now that plunge can be put down to the shortage of new cars that is itself the result of silicon chip and component shortages. But it could also be down to the squeeze on consumers' pockets and confidence from inflation. More worryingly, that figure meant that US car sales were no higher in April 2022 than they'd been in, wait for it, March 1979. It could be that the stimulus checks during the pandemic created a spike in demand then, pulling sales forward, with the result that demand is ebbing now. Meanwhile, the US unemployment rate was just 3.6% in April, when the American economy added 428,000 non-farm payrolls. They're your benchmark numbers for comparison for the May data. But economists and policymakers will be looking at the wage growth figures too, as a gauge of how tight the labour market is, and whether an inflationary spiral of higher prices, higher wage demands, higher prices, higher wage demands, and so on, is starting to gather pace. You can see how it could happen, given how hard-pressed families will be, and in April, the average US hourly salary rose 5.5% year-on-year to $31.85. Now, that was still below the prevailing inflation rate of 7.8% for the same month, so workers were still worse off in real terms, and I'm sure they've noticed that. The US job numbers may mean that the week ends with a bang, but the corporate news in the UK will be crammed into the first 3 days of the week, again owing to that long bank holiday weekend. Results announcements or trading updates which may be worthy of further research include the following, although some of these dates could still be subject to change. Southend Airport owner and infrastructure player Esken on Monday the 30th of May, water utility Pennon on Tuesday the 31st, and retailer Dr. Martens on Wednesday the 1st of June. But the company which could just cause the biggest fuss in the week ahead might be B&M European Value Retail. The FTSE 100 member is slated to release its full year results for the 12 months at the end of March on Tuesday the 31st of May. You could be forgiven for thinking that the shares in the discount retailer would be weathering the latest market squalls better than most, but it actually isn't the case. The shares are down by a quarter over the past year, a big enough dip to leave them in bear market territory. There are several possible explanations. Perhaps the Aurora family's sale of a 4% stake in the firm in January to take their holding down to 7% had maybe stoked a little unease amongst shareholders. Then came the announcement in April that Simon Aurora would quit as the company's chief executive in spring 2023 after what will then be an 18-year term in the job. Perhaps the share price fall is down to the recent rout in retail stocks in America after disappointing results and updates from Walmart, Target, Kohl's, to name but three. And perhaps it's down to worries about inflation, the surge in the cost of living, and how this could affect consumer sentiment in both Britain and France, as shoppers trade down through brands or even stop spending in some areas altogether. Either way, investors have shrugged aside January's positive trading update when B&M Europeans upgraded its full-year earnings guidance and also declared a 25p a share special dividend. This all therefore raises the stakes for the full-year results and also any guidance the company feels able to give for the year to March 2023. The first number that analysts will study is sales. The consensus forecast is £4.8 billion flat on the year before. The like-for-like sales growth comparison will also be telling. At the third quarter stage, group revenues rose 0.1% on a constant currency basis, while revenues for B&M branded stores fell 6.2% on a like-for-like basis. This was partly due to the distortions caused by lockdowns and a tough base effect, and in fairness, the gain on pre-pandemic levels was a still impressive 14%. In terms of profit, B&M European Value Retail uses earnings before interest, taxes, depreciation and amortization, or EBITDA, as its preferred metric, although it does do so on an adjusted basis. Using that benchmark, well, management has guided to a figure of between £605 and £625 million for the year just ended, compared to £626 million a year ago. For fiscal 2023, analysts are looking for a small, low single-digit percentage drop. For those of you who prefer statutory accounting measures, and I can't say I can blame you, the consensus estimate for pre-tax profit is £503 million, down from £525 million a year ago. For the new year just begun, analysts are looking for a further slight decline to £482 million, but again, to perhaps reflect the end of lockdowns and that inflationary squeeze on consumers' pockets and possibly the firm's margins. Analysts will be seeking out comment on input costs and how easy it's proving, if at all, for B&M European to pass those on through price increases should it try to do so. Finally, attention will switch to the dividend. B&M paid out 17.3p a share in ordinary dividends in fiscal 2021, when it also paid out 45p a share in special dividends. The retailer has already raised its interim dividend by 16% to 5p a share, and for the full year the market is looking for a full year payment of around 18p. It's also already declared a 25p a share special dividend, as we noted earlier. Thank you for watching. I hope that you and your families are in good health and good spirits, and I look forward to seeing you next time.